Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and it's the 13th of March, 2023. All right, everyone, let's get into it. So, I guess some closure on the USDC drama over the last 72 hours or so. I did speak about this on yesterday's episode, but it seems that everything is all well and good. So, Jeremy Allaire here, the co founder and CEO of Circle, who are the issuer of USDC, said in this tweet thread 100% of USDC reserves are also safe and secure, and we will complete our transfer for remaining Silicon Valley Bank cash to BNY Mellon. As previously shared, liquidity operations for USDC will resume at banking open tomorrow morning. So essentially, they'll be turning back on the redemptions. So you'll be able to redeem, well, not you in particular, but like the people who have access to this feature will be able to redeem USDC for actual USD. And because of this, USDC basically went back to its dollar peg, because if you can buy it cheaper and then just redeem it today, you can close that arbitrage there and make a bit of profit. So yeah, all's well that ends well there. Now, obviously, there's a lot of things surrounding this that have got, it's far beyond USDC itself. There was three major banks in the US that have been shut down over the weekend: Silicon Valley Bank, Silvergate, and Signature Bank as well. And two of these banks, I believe, Silicon Valley Bank had over $200 billion worth of deposits, so obviously very big. It's either Signature or Silvergate that has over 100 billion, and then I think one of those two also has about $10 billion worth of deposits. So obviously two big, one relatively small, but still, that's three banks in a weekend that have been shut down by US regulators, which is kind of crazy. And people were confused as to why, I believe, Signature Bank was shut down or Silvergate was shut down. Didn't really make much sense there, but I think it was for the same reason as Silicon Valley Bank. There was, worry about a bank run, so to speak. And it's funny because I think a lot of people in and outside of crypto are finally realizing that, bank runs in the digital age are really scary, because think about how fast information can actually move. It's no longer, and all the digital banking as well, it's no longer people reading about something in the newspaper and then going to their local bank branch and lining up and withdrawing money, and that's what causes a bank run. No, you can literally withdraw the money online now, right? And the news spreads extremely quickly. I mean, how quickly did the news spread on Twitter? I mean, this is only over the weekend that this happened, right? And there was potential bank runs forming on two other banks because of the Silicon Valley Bank stuff. So I think when you take that into account and you contextualize it, you kind of realize that we're in a new era now where bank runs have obviously always been scary, but it's even scarier now because of the digital age. So the US government, the regulators there, the Treasury, they all came out today or yesterday and basically said that they're going to basically backstop everything and bail out everything, in so many words, which means that everyone that was a depositor in these banks is going to get all of their money back, and it's all going to be well and good, and it's totally fine. Now, the reason why they did this is obviously because they need to instill confidence in the banking system, and they need to make sure that people don't attempt bank runs on other banks, because the only thing worse than inflation in the financial system is a bank run. If inflation is like the thing that the government really worries about, and can destroy, a currency, a bank run can destroy a country. And enough bank runs, I should say, can destroy a country, because it means that the entire financial system basically falls apart. And if the government can't get a handle on it to, I guess, stop the bleeding or kind of bail out where they need to bail it out, then no joke, the country can fall apart. Like, this is not something that is hypothetical. This has happened plenty of times in the past. Obviously, I think that the US is very far away from something like that happening. They have a lot of tools in their tool belt in order to stem this, and one of them, really, I mean, the first tool that you use is make sure that you instill confidence in the banking system by basically promising that you'll backstop any kind of issues here. Now, people also talked about what this means for things like rate rises. Obviously, that's been a big theme over the last 12 months, and obviously what it means for any kind of money printing that's coming. Look, I don't have the best grasp over the macro environment. I'm not an expert there, but it definitely seems like the markets are pricing in a pause to rate rises, at least right now, or a reversal. And from what I've read, the rates going up so quickly is one of the reasons why these banks had liquidity issues because they bought these, as I mentioned yesterday, they bought these kind of treasuries when rates were much lower, and then rates went up, and they're kind of underwater, and they're not earning the yield that they could be earning, and these different things have different dates of maturity, so it gets pretty complex pretty quickly. The banking system in especially the US is quite complex. It's actually very fragile. The fractional reserve banking system is very fragile, and I think it also is a very good advertisement for crypto. If we really think about it, I mean, the dollars in your bank account, they're there, they're guaranteed by the government to an extent, but they're never really yours, right? And even the dollars that you have, the fiat that you have, whether it be US dollars or Australian dollars, again, that's all backed up by the government, right? That's all backed up by the nation state that it's a part of. And for the US dollar is a bit of a unique case because it's the global reserve currency, but still, if the US dollar wasn't backed up by the US military, it would probably be worth a lot less, right? And it definitely would not be the world's reserve currency. So when you really start thinking about money, you start thinking, what do I really own? Like what money do I actually own? And for me, the way I think about it is that I actually own my ETH. ETH only has value because we've collectively come together as a society or as a global society and said, hey, ETH is worth this much at any given time. Yes, it's volatile. Yes, it's not very stable. It can go down, 50% in a week. It can go up 100% in a week. Right. But that's not the point. I think the point of these things, and not just ETH, but BTC as well. I think BTC and ETH are the only things that can act in this capacity. But that's the kind of money and store of value that people have said, this is what I want. This is the value that I'm giving to it as a collective. And this is what it's worth today. And this is what it could be worth in the future. And so on and so forth, right? Rather than fiat currencies, which are basically forced upon you. And it's the government basically saying, well, this is worth this because we say it is, and you have to pay your taxes in this. Which I think is an underrated point people don't really think about, is the fact that you have to pay your taxes in the native currency. And that's obviously done on purpose because that's where a lot of the value gets derived from. But also, the fact that from birth, the government and I guess everyone around you is telling you this is the money that you use in this country, right? In Australia, this is the Australian dollars, you use it here, and it's worth this and this because the government says it is, basically. Whereas something like ETH or BTC being used as money, that's just a choice people make. That's the government's not telling you to use it. The government's not giving it any value itself. People have given these things value, which I think is incredibly powerful and incredibly interesting, and really, I guess, speaks to the whole reason why we're actually building this sort of stuff. Obviously, we integrate with the existing financial systems through stablecoins and stuff like that. But at the end of the day, for me, I feel very comfy holding my ETH. I actually feel much more comfy holding my ETH than any other asset, even my cash in a bank account, even though I know that it's relatively safe because I'm in Australia. I still feel more comfortable holding my ETH. Now, of course, I can't pay my taxes in ETH. I can't pay a lot of my living expenses in ETH, and I would rather hold my ETH and stake it and use it as a store of value than a money. But still, it's there, right? It's something that I can be like, okay, this is actually mine. I self-custody this. No one else has custody of this ETH, right? It's mine. It's worth what the market thinks it's worth at any given time, and I can use it as money as I want. I can use it as a store of value. I can do whatever I want with it, which I think is pretty cool. Anyway, I'm going to leave that one at that. You can read Jeremy's full thread if you would like to as well. And there's also a couple of threads from Kraken and Coinbase, basically, I guess, instilling confidence in people as well, saying that everything is all well and good on their end. Their banking partners seem to be fine. Coinbase actually banks with JP Morgan. I think they're one of the only centralized exchanges that actually have access to JP Morgan for crypto banking. Kraken has a bunch of different banks I think they use. But yeah, it seems like Kraken and Coinbase are fine, even though those other banks were kind of shut down over the weekend. So yeah, you can read their little mini threads as well, which I'll link in the YouTube description below there. But that seems to be the end of the drama right now in terms of, I guess, the crypto-specific drama. There's definitely going to be a lot of talk about what this means for the broader economy, especially in the US. As I said before, like, does this mean that the hiking cycle is over? Does this mean that rate rises are going to stop? Does it mean that the interest rates are going to go down? Is that going to be positive for the markets? Does it mean we're going to get a new bull market? These are all questions that people are going to be asking over the next few months, especially. What other banks are potentially going to go under? Is this it? Like, is there just 3 banks that have kind of been shut down, or is there going to be more? These are all open questions, right? We don't have the answers today, but people are speculating. That's what they do. I think you should definitely not get too spooked by these sorts of stuff. As I said, information moves really, really quickly in the digital age, and a lot of this stuff is probably new to you. It's new to me. I'm learning as I go, but always good to keep your head screwed on and not get caught up in the craziness too much, because it may lead to you making rash decisions and you may regret it. Just like people who sold USDC under 90 cents because they had no idea what was going on. Well, if you just took like 10 minutes to just collect yourself and look at the facts, you would have known that USDC was going to be fine, as I said yesterday on yesterday's episode, and it was going to go back to $1 and be all well and good. Of course, there's always a risk that it won't. Like, I'm not going to say there's 100% certainty that anything is going to happen, but looking at the facts with a level head and actually looking at the incentives and looking at the most likely outcome, you can make sure to kind of keep your head screwed on and make sure you don't make any rash decisions there. All right, so related to what was happening with USDC over the weekend, there was a lot of volatility within DeFi and on-chain stuff especially, which led to a lot of MEV extraction. So you see here, Bert Miller from the Flashbots team put out a tweet where he said MEV boost payments were at an all-time high yesterday, totaling almost 8,000 ETH, which is nearly double the previous all-time high of almost 4,000 ETH during the FTX fiasco back in November. A few statistics on MEV on Ethereum yesterday in this thread. So yeah, this thread I'll link in the YouTube description for you below, for you to check out below. But I talked about this as well yesterday, about how when there is a lot of movement on chain and a lot of volatility on chain, there's a lot of MEV to be extracted, and that causes the payments to go up. That causes gas fees to go up. I mean, we saw gas at above 300 Gwei consistently for, I think it was over an hour it was there, which is pretty crazy considering that it's still, I guess, like generally a bear market, right? We're not in the craziness of a bull market again, but it was simply because of this. Because essentially what happened was, with USDC depegging, there is a lot of opportunity to front run, back run, sandwich attack, liquidate positions, and do general arbitrage. And because it wasn't just depegged to like 95 cents, right? It didn't just go from $1 to 95 cents. It was moving around. It was floating. It went to 91 cents, then it went to 93 cents, then it went to like 88 cents. So all of that needs to get arbed, right? And because you expect USDC to be at 1, there was so much volatility because no one knew what the actual price was. There was all the speculators taking advantage of it, and because of that there was a ton of MEV to be extracted. So that's why we saw that it was a lot more, I guess, like volatile than it was during the FTX collapse, which is obviously quite big as well, which was pretty, I guess, like fascinating to see. And there's a thread here, as I said, from Bert that you can check out. I'll link it in the YouTube description below. But Tony also had a kind of tweet here where he said, at the end of the day, almost 8,000 ETH were distributed to validators through MEV boost, almost double the amount we saw during the FTX breakdown. Just another chart for you to visualize this yourself. So you can see here that the gas fees actually were a very small portion as compared to the MEV. So normally the gas fees make up about 80% of all of this chart, and MEV revenue is about 20%. Well, just eyeballing here, it seems that gas fees were about, I guess, like 30%, and MEV was about 70% over the weekend here, or yesterday or Saturday, I think it was. So pretty crazy amount of MEV extracted there. And as Tony said, this was all distributed to validators through the MEV Boost network. Unfortunately, I wasn't lucky enough to propose a block during this time. It would have been cool to get one of those really high proposer payments. Like if you're a solo validator and you proposed a block with a validator payment or a proposer payment of like 30 ETH, you would have gotten 30 ETH as a reward for that block, which is just crazy, right? And this is what the MEV boost ecosystem is like during periods of high volatility. Especially periods of all-time high volatility and all-time high proposer payments, you can win the lottery. Imagine getting a 30 ETH block. That's just crazy. Of course, a lot of blocks are not proposed by solo stakers. They're proposed by pools. Obviously, Rocket Pool has the smoothing pool, which is opt-in, and then Lido distributes out the MEV to all of the people that are staking with them through STETH, and then Coinbase and Binance and Kraken, they all do the same thing, right? So it is a relatively low chance as a solo validator to get a block with a high proposer payment, because not only do you need to get a block, which is actually, to get a block to propose a block each day. So to propose one block every 24 hours, you have to have a lot of validators already. I don't know the exact number, but you definitely have to have 20, 30 validators or something like that, which is obviously a lot. And then you also need to be lucky enough to propose a block with one of those high proposer payments and not just a block that was a low proposer payment for whatever reason. So it's definitely, as I said, a lottery, but if you win it, you stand to win a lot. And people love playing the lottery, of course. So yeah, anyway. You can check out this tweet as well. I'll link it in the YouTube description for you to do so. All right, so a bit of a weird announcement out of Aztec Network today. So they've announced that they're sunsetting Aztec Connect. So they've said here, 1 week from today, deposits into the Aztec Connect contract will be disabled. Users will be able to withdraw funds with no fees for 1 year. All code is open source, and you can read the full announcement post here. Now, for a refresher, Aztec Connect was the layer 2 kind of network here, or I guess like feature on the Aztec network, the Aztec layer 2 network that allowed you to do private transactions at layer 2 while tapping into layer 1 liquidity. It seems like they are sunsetting this, or at least they're not going to be running the sequencer anymore for the network, and I think we can all imagine why. There's been an attack on privacy over the last few months since the Tornado Cash sanctions came out. It seems that either their lawyers told them to stop doing this, or regulators, I guess, leaned on them about this. They don't confirm that or say anything about that in the post. They kind of gloss over the actual reason why they've shut it down here, but I think there is a silver lining. What's really cool is that they've open sourced everything, so if people want to run their own Aztec Connect network, they actually can. The sequencer is open source, the code's open source, and they say that the Aztec team is still going to be building out their Noir language for zero knowledge and the next generation encrypted blockchain. So the language is a bit weird here. People take this to mean that they're going to be developing a layer 1. As far as I know, that's not the case. They're going to still be developing a layer 2, but they're saying here this is their next generation encrypted blockchain. Whatever that is, whatever that looks like, remains to be seen. But yeah, a bit of definitely a big sad announcement out of Aztec today. As I said, they don't really give a reason as to why they're doing this, but I think we can all imagine. But silver lining, things are open source. They're still going to be working on what they've been working on in the past. And yeah, it doesn't seem like they're going to be slowing down there. But of course, I believe most of Aztec is based in the US, so it would make sense for them to err on the side of caution here. But unfortunately, it's just really frustrating that privacy is, I guess, attacked like this. At the end of the day, privacy is actually a constitutionally protected right in the US, and the fact that it just keeps getting attacked, not just in the context of crypto, but the context of just everything digital generally, is really, really sad. But it is what it is. We can't expect the people that are US citizens or US persons to take these big risks themselves, because they definitely stand to get punished pretty severely for this, depending on what law they break or depending on how strict the government wants to be with these sorts of things. But that's just me speculating anyway. As I said, Aztec themselves didn't confirm anything about this, but I'm just reading between the lines here, especially when it comes to privacy preserving things. And that's exactly what I think has happened here, or what I'm speculating on has happened here. But anyway, you can read their full announcement for yourself. I'll link it in the YouTube description below for you to do so. All right, onto some news that only came out about an hour or two ago. So Euler Finance has unfortunately been exploited, and they have lost, I think, up to $200 million of user deposits, which is one of the biggest exploits in DeFi history, of course. Now, as I said, this is breaking news. It is definitely not something that I have a full view over, or anyone has a full view over just yet. We can probably confirm that it is a black hat, not a white hat hacker, because they're using Tornado Cash to wash the funds, and they did exploit another protocol a few weeks ago using the same address. Euler said here that they are currently working with security professionals and law enforcement. Who knows what the result of that is going to be, but the actual exploit itself wasn't a smart contract exploit or a smart contract hack. It was a mechanism exploit. Basically, what it means is that PeckShield details it here. They say the hack is made possible due to the flawed logic in the donation and liquidation mechanism. Specifically, the donate to reserves function needs to ensure the donator is still over collateralized, and liquidation needs to ensure the correct conversion rate from borrow to collateral asset. In plain English, it was an exploit on the liquidation mechanism that Euler uses, which obviously got past the auditors because they've been audited, I think, by 6 different security firms. And I've talked about this before on the Refuel about how I've said that it depends on the auditing firm and it depends on the scope of the audit. A mechanism exploit isn't necessarily going to be caught in a smart contract audit, because a smart contract audit is looking at the actual code, and if the code is doing what it should be doing, if there are any glaring issues in there of being able to be exploited and funds being able to be stolen from the contract themselves, a lot of the time they won't actually look at mechanism exploits like what's happened with Euler here. So very unfortunate. As you guys know, I'm an investor in Euler. I'm a very big fan of what they've built and what they have been building. I feel for the team because I know them, and I know the founder, and he just had a kid, so this is obviously not something that he wants to be dealing with right now. Hopefully, not many of you had funds in Euler. I didn't have any funds in Euler at the time of the exploit. I have actually used them before, but I didn't have any funds in there now. And if you did, unfortunately, it seems like the funds are all gone. I don't think there's much funds left in the contracts themselves. I don't know if they're going to be returned. Typically with I guess like exploits of this magnitude, it's very hard to actually hide the funds. Like I don't think it's going to be easy to wash $200 million worth of ETH, or I think it's $150 million worth of ETH through Tornado Cash. One, because a lot of Tornado Cash's liquidity is actually gone since the sanctions. And two, there are still breadcrumbs that can be left trying to wash that amount of money. And three, if at any point during their, I guess, exploit, they revealed who they were, whether that's through an IP leak, whether that's through funding their wallet via an address that was KYC'd or something like that, typically you could see law enforcement get involved and the funds be returned. Now, I'm not making any promises here, of course. I don't know. As I said, this is still fresh news. We don't know what's happening here. But yeah, very unfortunate. It's not something that we're not used to within crypto and DeFi, I guess, at the end of the day. But I think that it happening to Euler is very sad because, as I said, like it is a protocol that a lot of people love, a lot of people get a lot of value out of. They're not trying to do any cowboy stuff or any degen yield farming or anything like that. They've just been trying to build a really cool money market, which I still think is very cool, by the way. But unfortunately, they suffered an exploit here, and maybe I'll have some more news for you guys tomorrow on this. It doesn't seem like there's any other updates. I'm just going on their Twitter right now. There's no other updates right now about this. There's just the tweet from Peck Shield describing the exploit itself, and the tweet from Euler Labs announcing it here. So yeah, hopefully you guys aren't affected by this. I know there was one person in the Discord channel, or two people actually in the Discord channel, that said they were affected by this. So that's unfortunate there. But hopefully there is some kind of fund recovery that can happen here. We'll have to wait and see, but I'll keep you guys updated on that. All right, so in some more positive DeFi news, Uniswap had $12 billion in daily volume yesterday, which I believe is an all-time record here. You can see on the chart what that looks like. Obviously, this was due to the USDC depeg. As I said, when things depeg, there's a lot of arbitrage opportunities, a lot of front-running, back-running, all that kind of stuff, opportunities, and that will definitely play out in Uniswap, since Uniswap has the most integrations in DeFi and the biggest liquidity pools in DeFi as well. So what would happen is that a lot of people were trading in and out of USDC, arbitraging between different liquidity pools. A lot of people were speculating. A lot of people were doing a lot of MEV extraction on chain, which led to a lot of this volume. And you can see that it's just a massive outlier. And the funny thing is that you can actually see on this chart the various events that lead to a lot of volatility within crypto. So for example, you can see that the last time it was this volatile was the FTX stuff that happened, right? You can eyeball here, it was in November. And then before that, you can see that it was during the collapse of I guess the market in June, July 2022. And then you can keep going back and back and back and see all the kind of stuff that's played out, and how, like, in May there was the Terra collapse, obviously led to a lot of volatility. So it's always fun to see the outliers here. But yeah, this is the biggest one by far, and this was a huge amount of daily volume, $12 billion, which I believe was just on Layer 1 Ethereum. It wasn't including everything. There is a Dune Analytics query here that Austin Adams put together, which is what Hayden Adams is I guess, retweeting here. I wonder if Austin is Hayden's brother, because they share the same last name here. I don't know. Anyway, that's an aside. But yeah, you can go check this out for yourself. I'll link it in the YouTube description below. But I guess some positive news out of the DeFi ecosystem, that we saw a lot of, I guess, volume on Uniswap here, and Uniswap seemed to handle it just fine. All right, last up here, we have an update out of the ethOS ecosystem. So I've talked about ethOS before. It's basically this piece of software that you can load onto an Android device. I believe they support Pixel 3, 3A, and 5 right now. So you can load this onto your device, and it's basically an Ethereum phone. So ethOS 1.0 was quite limited. There wasn't much you could do with it. But with the release of ethOS 2.0, there's a lot more going on now. And I actually had a walkthrough of this a bit earlier with one of the people, one of the founders of this project, and they walked me through it, and it's actually really cool. So the cool things about this are, one, it actually runs a light node, a light client in the phone itself. So basically what it does is it runs a light node as, I guess you could call it like an optimistic light node, where it will still talk to third-party RPCs, but will validate or I guess like the validity of the data that's being sent back to you by using the consensus layer on the beacon chain to do that. So that's very cool. Obviously, we don't have full-blown proper light clients in Ethereum yet. That'll hopefully come with the Verge. But right now we have like this optimistic light node client as part of ethOS that you can use. It has its own inbuilt wallet that actually directly integrates with the browser. So I got a demo of this. Basically, you can go to Uniswap on the browser. You can go and connect your wallet there, and instead of it taking you out to a separate wallet app, it all happens on the same screen. So there's no kind of changing screens or anything like that. It all happens directly on the screen, and it all hooks into the wallet that is built into the ethOS itself, which I thought was very, very cool. There's a new app store called the Aurora App Store, which basically allows you to access the Play Store, and people will be able to develop their own apps on there for ethOS specifically. They have an NFT mint app, so that they've detailed here, that allows you to mint NFTs within 30 seconds or something like that, using that app on mainnet. They also support every EVM chain. Right now, they're only supporting the top L2s natively, but they can basically support every EVM chain, and it's very cool. You can actually... So in that Uniswap demo I was talking about, if you wanted to change from Uniswap on mainnet to Optimism, for example, you could just pull down at the top on the notification bar, pull down, select, push a button, and be able to change chains basically from Ethereum mainnet to Optimism or Arbitrum very, very easily. So a lot of very cool features going on here. I can't wait to load this onto my Pixel phone. So I originally did load ethOS 1.0, which, as I said, was very limited. There wasn't much going on with it. But with ethOS 2.0, you can actually use this as a daily driver now. As I said, it's got the Play Store on there now, where you can actually download normal Android apps and experience the ethOS. All the ethOS apps and all the things that are built in there while still using it as a daily driver. So yeah, if this is something that interests you, you can go check this out at ethosmobile.org. Just to be clear here, this is a new OS for your phone. This is not something that you just kind of put, it's not an app that you install on your existing phone. They only support 3 phones right now, as I said, like Pixel 3, 3A, and 5, I believe. And if you've got one of those phones, you basically wipe your existing OS and you replace it with ethOS 2.0, but you can use it as your daily driver, and it actually works pretty well from what I saw in the demo that was shown to me there. But anyway, you can go check this out for yourself. I'll link it in the YouTube description below. But on that note, that's going to be it for today's episode. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.